Okay, let's hope that this is a little better. And yeah, hopefully that was just a little bit of a freak incident. So, okay, moving on here. Thank you for your patience. So, the Ethereum trade, huge move down. It's the weakest that, I mean, I've ever really seen this pair in a while. Kind of the line we don't want to start trading below is the 180, 138. That is the 1/8 major harmonic. That's kind of a really big zone and an important one, where the next level below that, as far as area of importance, is the 0/8 harmonic. That is at the price level of 1. So this is a bottom that we want to see as a strong support zone, especially if we have a long bias. And if I go to the 1 hour chart, the last hour that we traded, the noon hour, this was one of the largest accumulation and buying candlesticks that we've seen in a long time. This is one of the biggest supportive candles that we've seen in Ethereum in a while. And if it holds, we have a pretty good bias for a double bottom being formed here. There's, it could be and we'll just have to see how this plays out to see what the mood here is. But Ethereum definitely is under a lot of pressure, price action wise and news wise. You know, I don't know what else to tell you. It's just kind of ugly. But right below, again, at the 180 zone is a really important support area. That's why I'm inclined to actually pick up some Ethereum at this level. I think that this is a fine area. This is a good risk reward area for me, and I'm actually kind of okay with going long in some Ethereum here. When Ethereum has a recovery, it really outperforms Bitcoin in a big way. And so if you're somebody who only likes to trade, quote, the majors, that'd be anything that's traded on Coinbase really, then Ethereum is certainly one of the best options. If we look at Litecoin, Litecoin really has not deviated much from where it was at before. I mean, it's slid down, but it hasn't. It really, if you look at it, there's a ton of coins built off of the Ethereum blockchain, and they're the ERC20 coins, and they are all performing very poorly. But for whatever reason, some of the forks off of Bitcoin are actually seeming to do okay. So Litecoin not as under as much pressure as Ethereum. Bitcoin Gold even is looking a little safer. Bitcoin Gold has actually been somewhat of a stable zone. It has not seen a lot of corrective action at all. Bitcoin Cash, really hate Bitcoin Cash, but BCHUSD, there we are. Oh, maybe I had it up here already. Yep. Bitcoin Cash, I mean, it's really just kind of followed Bitcoin. But yeah, I mean, we're just really seeing a lot of the Ethereum tide and Ethereum created alts are the ones that are getting hammered the most. Bitcoin itself is showing a little bit more resilience here. All we've really got going on here is we've got a symmetrical triangle that's formed, and that has broken. We can see that on the where are you at? Where did I draw that? Well, that's okay. Just looking at the 4 hour, not this current 4 hour, but if we were to draw some trend lines from swing lows and swing highs, almost a rising triangle there, but really go from here. We see that the triangle has been broken to the downside, and now it's trying to test back up. Certainly, the thing that we would like to see for a bullish confirmation moving forward is for we really need to get above. We need to get back to 6,400. That would be a nice confirmation of a move back up. But otherwise, just kind of ho-humming around here, and been stuck in a range trade ever since the 5th. So we had 5 days of really trading in the same value area, not deviating much. Really strong pressure to sell back on the 8th, which was promptly bought up overnight at 4 a.m. on the 9th. There was a strong buy there. So, really not seeing a whole lot of change in direction here. But it doesn't take much to move this. Looking at some of the alts, Cardano continuing to print. So the Cardano dollar calculation is continuing to print these lower lows. It's been just continuing down, but this long-term trend line seems to be holding as some type of support. Basic attention token on its dollar pair. Again, that this guy's also starting to do a little bit of a painting some lows. It's sitting right on a prior low, but we're making new lows here in basic attention token. Walton Chain still is actually holding a lot of the gains that it made through August, about 50% of those gains. This guy, Walton Chain and Nano look a lot alike, but Nano certainly coming down and testing out the 30 zone here. We'll see if it wants to come back to retest the 2621. This is the 0.8 major harmonic. We'll see if there's a push to test this zone or re-enter this pretty steep channel here. All right. XLM is actually, out of those ERC20 coins we've looked at so far, is the one that is actually holding up more than the others. If we take a look at EOS, it's actually holding up pretty well as well. I mean, compared to this move, I mean, it's actually sitting pretty nicely and not suffering as much of a drive lower as the other guys. So I want to look at this from the Ichimoku perspective and see if there's any kind of change that we could observe on the Ichimoku system. Anything that we could anticipate, like a dead cat bounce to catch that falling knife. So let's look at Bitcoin on the Ichimoku system here. Certainly on the hourly, we have something about as flat can get. Not really seeing a clear signal here at all. On the daily, we are still trading below the cloud. Not seeing any type of bullish conditions here. Generally, on the daily, when we get a cross above, if we're trading below the cloud and we get a cross above the conversion and the baseline, those are generally nice signs of a long-term trend change. But if we're looking at Bitcoin's chart in the top left, this is the daily chart. We can see that out of all the past attempts to break out of the cloud, they have been met with rejection. All right, we'll see if there's another type of bounce out of this zone, but on the daily, this is looking like we still have a lot of sell pressure there. The 4-hour chart, again, not looking very healthy. Although what is interesting is that as we created a full condition for selling, there has not been a lot of follow through here. There has not been a lot of urge to push lower in this area. And then certainly on the hourly, we see a pretty flat and tight range. We've actually been trading in here around this zone ever since 6 o'clock last night. Sorry, 4 o'clock last night. No, I was right. 6 o'clock last night. Litecoin, really the same issue there. There's clear buying and pretty heavy selling pressure coming off of these, but it's going to be interesting to see, how much of a bearish response there is to actually create new lows on Bitcoin and on Ethereum. Ethereum's getting a pretty strong level of support, and the volume is definitely pouring in at these levels. If we look at the 4 hour over here, we have a nice wick forming up here. The 1 hour chart still not showing anything, but really, I really do want to add some Ethereum, but I want to wait for a condition on the hourly at least. And so I'm really waiting for that 209 area. That's what I would like to see. Gotta pull up Telegram here to get those out. Close you out. So waiting for that 209 area to paint here on the Ichimoku. That's what I would really like to see. On the Ethereum Classic, I like Ethereum Classic. Ethereum Classic sitting here, just really kind of following the broader market, but not showing as the short term here, not showing as drastic of moves, but certainly on the daily, we could see some conditions being met where we have a bull flag possibly forming off of the low here with this trend up. So a break above the cloud with price and the lagging span at the present value area, we'd have to wait for 1182. But if we shift forward 1, 2, 3, let's see. Is it 3 o'clock? Wait a minute. What are we looking at here? Why does this say 11? Oh, sorry. If we move up 1, 2, 3, 4, 5 hours, say 5 hours, so 6:20 p.m. That would probably be the time we'd see that long signal. If we see lagging span go above the cloud, and if price is above the cloud, then looking at that 1164 as an entry. And that's on the 1 hour Ichimoku. 1164 is actually pretty good there. I want to go back to Ethereum here and check out the distance it is from the baseline. I think it's actually it is. Oh yeah, I did this morning. It is within the value range for it to see a snap back to the baseline. Let's check out Bitcoin. Bitcoin on Ichimoku could form some bullish reaction here on the hourly. Bitcoin's chart compared to the last two that we've just looked at, like Litecoin Ethereum and Ethereum Classic. Bitcoin looks like it has a more easier drive here. So like at 64, 66 would see price above the cloud and the lagging span above the cloud. 64, 66. Sorry, that's at 6466. And Litecoin, see this guy here. Litecoin as well, similar conditions at 57.14. And let's check out Cardano. What does Cardano look like? Cardano is the ugly duck out of the out of the quote unquote Coinbase 5, Cardano is the ugliest looking chart. It looks a lot like Nano and Walton Chain as far as how it has moved over the last little while. We've had 100. One thing I think is really bullish is that so we're coming up against this 144-day cycle. 144-day cycle is a really big deal in Gann's work, where anything actually with a series of 144, you see big changes in both the trend and the volatility. So 144 days from anything, and again, we're not talking about exactly 144. We're talking about, you know, a time period before or after is appropriate, you know, give or take a few days is just fine. So, you know, we are 130 There are 130 days into this move. This is getting close to that 144. The other thing is, actually, I'll go back to that. I'll keep going here. 4 hour on Cardano, we are pretty extended away from the baseline. There's a bias for a structural and a normal bounce here. We're probably seeing that play out here right now on the hourly down below. I actually just bought some at 71. It would be 7.071 cents in the dollar pair. That's what I had picked up, but I like that there. Basic attention token. No, don't want to do it yet. Walton Chain. Walton Chain on the daily looks a little bit more promising. The hourly, we would need a little bit of a drive, but the hourly on Walton Chain, a lot of these charts are going to give us the same kind of values, but I need to see the BTC pair. Same with probably Nano. Yeah, it's the same thing. Let's zip it down here. Okay, BCPT, Black Mason Credit Protocol. This guy is primed for another pump. It has underperformed its peers on all metrics. It's way hugely extended away from its baseline on the 4 hour. It's more extended than its peers on the 1 hour, and then on the daily, it's just sitting within some kind of normal value area. I'm interested in a long trade here at 1210. BCPTBTC 10. Oops. And let's see. DigixDIO is out, kind of done fairly well ever since the big breakdown. It's actually shown a little bit of resilience, a lot like Bitcoin Gold has. You know, we've seen this massive volume come in to support that price. This might be something like, I don't know, like insider participation, possibly to prop it up. Who knows? But we'll wait on that one. Bitcoin Gold showing a little bit of oomph. Bitcoin Gold on the daily actually has a really an easier path to being above its daily chart than other coins. It's also got the easiest way to get a buy signal on the hourly and as well as on the 4 hour. So Bitcoin Gold, I mean, really this entire range here has to get broken up higher, but I mean, really it's just seeing price break above the cloud and seeing the lagging span above price. So we're looking at that 31.54 would be that long entry. what did I say, 30, 31, 14, no, 31.50. Yeah, that's right. Maybe a little bit higher there, 31.60. So on the 1 hour Ichimoku, let's see. Dash has had a nice run here, and it's showing a lot of strength compared to the rest of the market. However, I'd be a little careful. You know, we've got a pretty common looking bear flag forming, so really not. The only way that I'd want to go long is if we get a break of this channel here higher, and that would bring us right up. And it's going to be difficult because that break would coincide right with this former top over here. So yeah, there'd be some issues with that, you know. And we can see right now that on the daily chart that Dash is having some difficulty up against the top of the cloud. Whenever you see a cloud that has a very flat top or flat bottom, that is a sign of significant strength. Okay, not only is the flatness strong, but if the length of it is very strong. So we're looking at a very hard resistance zone right here. But the thing is though that if we were to break the top of this cloud and trade above it and hold above it, then that would be a pretty bullish sign there. But you know, ultimately, looking at this on the 1 hour chart and the 4 hour chart, this is really just looking like a bear flag, and it's kind of dangerous to trade it because the short idea would be to short the Ichimoku system would confirm the geometry. It would be a break below 182. So, I mean, we really need to see a break of this 223, 224 zone. Actually, like 225, if you want to just say it simply, 225. That would need to hold or break above that and hold. But because kind of missed the trade on this one. Actually, I was holding some Dash 2 weeks ago and into last week, and then I sold. EOS on the daily shows a little bit of support here. Kind of got an inverse head and shoulders on the 4 hour. And then on the 1 hour, EOS has a fairly easy to identify breakout zone. That's at 523. That would also bring us above on the 4 hour, that would bring us back above the base and the conversion lines. That would be ultimately kind of and above these highs here. So that would be a nice a breakout higher sign on EOS. That might be a good trade option. Doge, let's look at Dogecoin because there's a lot of jokes going on with Dogecoin, like Doge is the future. This is the future of Bitcoin. It's the most recent pump coin. Doge is kind of a silly coin. ZRX, that's one of the Coinbase 5 that I call one of the 5 cryptos that is that Coinbase has openly tweeted and said that they're looking to add to their platform. That would be Cardano, Basic Attention Token, Zcash, Stellar, Lumen, and then we have this one, OX. And on the hourly, looking like we're getting a little bit of support down here. Nice buying pressure. So this is the hourly chart, and we are a little over 30 minutes into it, and we are also a little over half the volume that was traded in the last hour. So this is something to pay attention to and look at. The 4 hour chart may be showing a little bit of support down here as well. Same with the daily 4 hour chart as well. The OX trade, I'm looking more, this is where I might consider a break of the rules a little bit, because there's a downtrend angle here, and really I would look to see a break of the cloud as a good enough confirmation, with the lagging span kind of shortly behind it, because really if we look at the rest of the market, you know, if it starts to experience a rally from here, then so is OX. So we don't really have to worry about the rule of the lagging span not being above the price action, because this will just be carried with everything else. So really, maybe even a break before that. So like at the 57.30 wouldn't be such a bad. Let's do the Bitcoin pair there. The 90.75 wouldn't be a little higher. 91.76. Oops. What did I say? 90.76. All right. Then ZEC or Zcash. That is one of the Coinbase 5, although I don't know how it is. No, I don't want to. I mean, it's got the same chart. Zcash, there's better trades out there. Monero was outperforming the market quite a bit prior to our big 20% dump, but Monero's got a lot of pressure behind it. Monero is a privacy coin, and depending on how you view privacy coins, you can view them like that they're going to be super valuable or that they're going to be thrown into the dustbin of history. And the reason I say that is because there's some issue with Monero as far as its ability to stick around. I love the ideals and the politics behind it, and the liberalism behind it. Not the current liberalism, but traditional political liberalism, that the kind of liberalism that Milton Friedman would talk about. So I like that. Although Milton Friedman probably would not agree with a currency like Monero. He's kind of turned into like a Fed-friendly guy later in his career. But Monero, for the short term, I have no idea how long this guy's going to last. But I still think it's a good speculative trader that I like. But right now, the chart I don't like. It's not as friendly as some of the other ones that we've seen. So there's other things to look at. NEM is XEM. It's I think it's in the top 20. A lot of these are the top 20 coins. So the daily looks pretty awful for it. 4 hour, not seeing anything. The day, now the hourly, this might be one that I would pick up just because it's a little overdone on its hourly compared to where it's been trading in that range. Same with the 4 hour. But now I'll come back to it if I think so. Steam. I love Steam. It's one of my favorite things to trade. I don't know why. Probably because it's so fast. Looking at Steam. Well, let's see here. Yeah, Steam could catch a bid at a break of the... no. Siacoin. This is on Bittrex, though, if you like Bittrex. Nope. Qtum. Qtum might have an interesting area. Let's see here. New. Populous, PPT. I actually have some Populous that I hodl. Nice, getting a nice little bounce here on the hourly. It's just something we're seeing right now quite a bit. OMG. OMG some nice volume pouring in there on this. Wait, this is Bitfinex. Why do I have Bitfinex? This one. And why is I don't want Bittrex on Binance. Sorry, guys. There you go. Okay, there we go. That's a little better. I actually like this entry here. This is some pretty... Yeah, I'm actually cool with that. That's a good... I dig it. I'm going to do it right on the present value area. Oops. Neo. No, don't want to touch you. Lisk. Ooh, Lisk daily. Well, although this is a pretty interesting bull flag we see, and so if we're gonna go all like Elliott wavy on this, if this was our corrective wave, our first corrective wave, so leg 2 here, then we would expect to see the third impulse, the third motive wave higher here. And there's a lot of these inverse head and shoulders patterns showing up on the hourly, at 4 hour and hourly, which is making me think that, okay, well, if those are reversal patterns and we're already at these market lows, then there's not enough data for cryptocurrencies to confirm whether or not the head and shoulders patterns are profitable. There's been a ton of research, a ton of academic, empirical, and evidence-based research on the head and shoulders pattern as far as if it's profitable or not. It turns out it depends on the market that you're talking about. So I know that one of the studies on the head and shoulders pattern that was done in the 90s. Damn it. It's going to bother me that I don't remember this. But you can find it in the 3rd edition of Technical Analysis by Charles D. Kirkpatrick and Julie R. Dahlquist. If you are going to be a technical analyst, or if you want to make a living trading using technical analysis, you need to throw your body into the entire field of technical analysis and read a lot. And maybe check out the Chartered Market Technicians Association and look at that. Okay, I'm going to find this. I don't want confirmation. I want candlesticks. Here we go. Okay, so it's triangle, diamond bottom. That's got to be before that. Head and shoulders got to be before it. Do patterns exist? Bar chart patterns. Hang on. Hang with me. I really want to get this out there. We've all got the attention spans of a fly, but okay, so head and shoulders pattern is probably the most famous technical pattern. Its name is often used when ridiculing technical analysis, yet its profitability is high relative to other patterns. And it is one of the few that the Low, Mimesky, and Wang 2000 studies showed that had statistical significance. It's a complex pattern because it combines all 3 potential characteristics of a pattern: trend lines, support or resistance, and rounding. It's often seen at a top or bottom, but it can occur in its normal state or as a failed formation and consolidation, which is a very, very common thing. In fact, one of the things I know about head and shoulders patterns that is written about academically and just from experience is that if they don't show up if they show up on a fast time frame, but like on a daily chart, you're not trading near market low or market high or swing low, then there's a really good probability that head and shoulders pattern is going to be rejected. So as profitable as, well, I'll keep going here. So it should only be this is like this is the thing that they point out, and things that if you've tried trading head and shoulders patterns, then you'll relate to this. But it should only be traded only after it has formed completely. Its complexity, well, how did I pronounce that? Its complexity causes many impatient analysts to anticipate its formation and to act prematurely. Anybody else done that? Its performance and success rate are high, but only after it has formed completely and satisfied all requirements. Okay, so what I'm reading is not from some forum, and it's not from some self-professed genius of technical analysis. It's not from TradingView Chat. It's not from BabyPips.com. It's not from Futures.io. This is from the CMT curriculum, and they got it from the third edition of technical analysis. This is like the Bible of technical analysis for traders, and they have done like legit research on the head and shoulders pattern. So blah 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 blah. There was some information about the profitability depending on the market, especially in Forex. Let's see. Okay, a breakout is a requirement for the formation. Second guessing before completion of the pattern can be dangerous. They repeat through the entire section on patterns, especially on head and shoulders, that it's dangerous to try to trade a head and shoulders pattern before it's complete, because they get rejected generally more than they get completed. But when they complete, they are generally profitable. In fact, let's see. Sometimes the right shoulder does not form completely and prices fall short of breaking the neckline and rise to penetrate the above right shoulder peak. Not only is this a failure, but it also is an opportunity provided the analyst had not anticipated a breakdown and acted prematurely. So essentially, without like reading the whole rest of this, there's actually, you can trade to the inverse of a head and shoulders pattern if the pattern does not play out, and then you start to move beyond the right shoulder that is either the top or the bottom. If you have an inverse head and shoulder, then you would want to short at a cross when price crosses below that right shoulder, okay? Because people who trade head and shoulders patterns, new traders, and I'll just say this, novice traders like to trade a head and shoulders pattern like it will form. They don't wait for it to happen. They like to trade before it forms. That is like chasing straights and flushes in poker, and it's dangerous. And the thing is that once you've had somebody take a trade where they think is the top of the right shoulder, or if it keeps moving here, you know, let's just look at this. So we have so let's just say this is our head and shoulders pattern, kind of roughly drawn, but you'll have somebody who will want to go long right here, or they'll wait right here to go long. And then what happens is it gets rejected. But people stay in it because they're like, okay, maybe it's just a little pullback before it wants to break out higher. But then once it passes here, this is where people kind of capitulate, right? All you've really done then is you formed a bear flag, and then you have a breakout to the downside. So, you know, there's two ways to trade those head and shoulders patterns. There's not just one way. Just because a inverse head and shoulders pattern doesn't turn out to be trading higher doesn't mean you can't short it when it crosses below that right shoulder. So there's it says a breakout that occurs on increased volume is good, but decreased volume is a sign of an impending failure. So just be aware of that. And then they point out that pullbacks or throwbacks are frequent, roughly 45 to 63% for bottoms. And so what we're saying is that a bottom forming head and shoulders, which is an inverse, 45 to 63% of the time we get we'll get a pullback down to the neckline as a retest, and then 60 to 67% of the time for a topping head and shoulders pattern, which we can see. Let me get rid of the Ichimoku here. we can see that there's a head and shoulders pattern right here. Okay. And if we were to look at this like on a smaller time frame, we would see that the retest happened right here. But we can see that there was a big push down lower, and then we fell down below, and then right here was the retest of that neckline. And so 60 to 67% of the time there's a retest. And in fact, probably one of the safest things that you could do if you don't want to trade a head and shoulders pattern on the breakout, because you don't like seeing price go down and then go right back up, because then you leave because you're scared of losing out on your profit, then what you could do is just, pretend you took the breakout and wait for the retest, and then short again once it starts to move lower. So that's a good that's something to think of. So they said that the performance rank for the standard head and shoulders top is a 1, meaning it's the highest rank possible for any pattern. So any pattern out there that they're talking about, whether it's a pennant or a flag or breakout gaps, opening gaps, islands, spikes, dead cat bounces, and any type of pattern in the market, the head and shoulders pattern is the most, has the highest rank. So they wrote that we have seen in most other patterns that when a pullback or a throwback occurs, the comparative performance suffers. This is also true in head and shoulders patterns. The failure rates for both top and bottom formations are low. Only 3 to 4% failed a 5% gain or more from the top or the bottom. In short, the head and shoulders pattern formation has a high rate of reliability as well as profitability. And so what they're saying is, and really, guys, this is one of the easiest patterns to spot. It's a frequently occurring pattern on all time frames. And if you follow strict rules with the head and shoulders pattern, I really hate talking about the head and shoulders pattern, to be honest, because I think it's I think it's overly used, and even I kind of make fun of it from time to time. But for the most part, it is a very profitable pattern. But the point is you have to wait for the breakout. And if you're somebody who likes to scalp, if you don't want to hold on to long positions, then a head and shoulders pattern is actually fantastic for you, because your entry and your exit for a scalp is very, very close together. I mean, and it's very, very possible and highly probable that if you put a buy-in, like if I were to put a buy-in right here at 390, and if I'm scalping, I want to get out at like 4. I'm not much of a scalper, to be honest. But if we got in at that 390 and there was a break, the breakout higher is usually, even before a retest, there's a pretty substantial move higher. So you have guaranteed locked in profit on a successful break. So that is something to think about and pay attention to. So it's talked a lot about the head and shoulders pattern there. Didn't mean to, but anyways, Lisk, looking like it could have a nice move higher at some point here, but we're gonna wait to see that play out. On the 4-hour, look at that volume there. That's pretty heavy volume on the 4-hour. Even on the 1-hour, we're seeing a lot of volume participation. Let's go back up and take a look at what we've got going on since we've been talking. So Ethereum. Nice buy pressure there. Look at that on the 4-hour chart. That's a pretty bullish looking candlestick right there. And again, things like hammers. Oh gosh, I don't even like hammers that much. Candlestick patterns are single candlestick pattern behavior is, if you're a price action trader, you love them. But I rarely look for any candlestick that is I really don't care about them unless they're hammers or inverted hammers, shooting stars, dragonfly dojis, those kind of things. Other than the rest of them, I really don't care. But there's a lot of subjectivity when it comes to the hammer. So a hammer candlestick like we've got forming right here, the color of the close does not matter. It doesn't matter. Okay, all we know is it forming near a swing low? Yeah, definitely it is. Then if I look here on the 1 hour, that's a pretty sexy looking. Some people would call that a doji. Some might call it some type of hammer, or some might call it a harami, or something. Nothing, it varies. But what we do have here on the hourly forming is a bullish pivot setup, and I've talked about these before. These are also very profitable. So a bullish pivot happens when it's a 3-bar pattern, and that happens when the middle candlestick has a lower high and a lower low than the two outside of it. So the candlesticks on each side of the middle candlestick both have a higher low and a higher high. And preferably the close of the current candlestick is higher than the close of the prior candlestick. So and you want to see the volume in there too, but volume is sometimes hard to adjust for in cryptos when we've got those proverbial whales floating around. I hate that excuse about whales. Oh my God. It's just silly. The nice activity right here we see, got 6 minutes left on the close, but that's a nice bullish pivot setup here on the hourly. Really do like that. Let's see what Bitcoin has done. We're looking pretty good on the reversal side of things here. There's a lot of inverse positive action going on here. So, and again, I'm going to draw us back to the mirrored foldback pattern. Okay, take a peek at it. Going to go back to my ideas and pull this up. And where are we at? Oh, yeah. Mirrored foldback. And what we are looking for, if I hit the play button, for those of you who are unfamiliar with TradingView or new watching this recording, when ideas are published on TradingView, they're published on the hour and the day that you did it. You can't go back and change these dates. So I published this on June 18th. The reasons for why I drew this foldback pattern are all listed in here, and I've updated it to yesterday. 21 hours ago I updated it. Looking at the mirrored foldback pattern, so far price action is following the method and the pattern of this foldback. So, I mean, is it exact? No, but what we're looking for is the structure in the big swings to trade like they did. Now, I remember somebody asked me in TradingView yesterday, on the foldback pattern, is it invalidated because the low of where we're sitting at now. So the low of where we're sitting at now is lower than the ratio between the foldback pattern of this low and then this one over here. And it's not invalidated because, in fact, this could have traded lower than here and still been okay because we're looking for the swings. All right? We're looking for a timing of those swings and not the exact price to trade or the exact ratio, even though most of the time it does. But so what is this telling us? This is telling us that there are, in the next 7 days, give or take a day or two, in the next 7 days, we should observe a rising consolidation in prices followed by a extremely large spike to the top. Okay? we should look for that to happen over the next 7 or so trading days. And that kind of behavior really coincides with the time cycle here, this pivot on the 14th, and then in the looking at the craziness of that Venus. Get rid of that. I mean, oh God, this still freaks me out. But these are the degrees of the 36 degrees of Venus. How they seem to plot out a lot of these swing high, swing low zones. This could more than likely be this could be a swing low on the 18th. It could. And then we've got this new moon that shows up. So there's just a lot of stuff happening right now and then within the next few days that are very bullish for the price action to trade higher. And looking at the mirrored foldback, I mean, the price action higher is a pretty big drive higher. It's a pretty steep rise higher. And yeah, I mean, and that's a very easy thing to do right now because we do not have a lot of volume participation, and a lot of people have gotten scared out of the market, which is great because the more people leave the market out of fear, the more you know that you're at a market bottom. And we've been talking about being at a market bottom for the last few months. This is just a typical accumulation zone. It's just, this is what we've been doing for a while, is just trading in a consolidation and accumulation zone. And there's a lot, there's a lot of support right below us. This arc should act as support. We've got the new moon phase, which shows up during a swing low. And for a lot of altcoins, they're at their all-time lows. Those are all very, very bullish signs, and we could consider them to be warning signs of a discontinuation of lower price action. And again, I brought up the head and shoulders pattern also because there's a head and shoulders pattern right here. Okay, we see this head and shoulders pattern. That is a Gartley pattern, not a head and shoulders. Oops. So depending on how you draw this, we do have a head and shoulders pattern here. And again, the breakout, if you want to trade to the inverse of this head and shoulders, failed head and shoulders breakouts are very profitable. Failed head and shoulders patterns are very profitable. So, I mean, for the neckline to break, we would need to be trading below 5,600 here on Bitcoin's chart. But looking at this, here, if we were to trade back above and go beyond this right shoulder, then that would be a pretty nice big rally to the top side. It would break a lot of resistance, especially in price. But again, we're right up against this pivot in time. We're up against that Venus division of 36 degrees is right up here. A new moon. We're at a very big swing low on a very, very steep drive down. This is like the definition of a blow off move. And from this prior swing, we are at oh shit, that's funny. Yeah, that's classic. 45 to 49 day pattern. We should see a move on this week. I love Gann. That guy was nuts. Okay, anyways, I'm past my time. So again, there's a lot of places that provide this kind of service out there, and they only show up when the market is doing well. That's fine. I understand a lot of people who even provide these services. We become victims of the market sentiment too. It's hard not to feel upset or depressed when prices go down, especially if you've just dropped $2,000 on some positions and then it went down another 5% on Sunday. So that always sucks, but you just have to deal with it. Please don't forget to like and subscribe. And give a thumbs up if you found this helpful. Again, apologize for the little bit of the hiccup right away at the beginning of the stream. I thought I had that solved, but I didn't, and thank you for your patience. And Forex Lens, folks, I will see you tomorrow morning, bright and early at 7:30. For the rest of you, I will see you tomorrow afternoon, same bat time, same bat place. Bye-bye.